Get Rich Education is brought to you by Norada Real Estate, the real asset investor, and Mid-South homebuyers.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Hey, welcome to Get Rich Education, episode 120. Hi, I'm Keith Weinhold, heard in 178 nations worldwide. Thanks for being here. Don't follow money, make money follow you. That's what I like to say. Instead, most people follow money all their productive lives. They uproot themselves and their family, and they move to wherever a job opportunity is, sometimes a job that you don't even like. And you've got to be real direct with yourself and ask yourself, is that really the life that you want to design for yourself? Do I want my life to be about following money? Scarce mindsets answer their questions. Abundant mindsets instead question their answers with questions just like that. Live where you want to live and find the right team of professionals in a market where your numbers make sense so that they can secure a passive income stream for you that follows you. Now you're on the road to financial freedom so that you can truly live where you want to live and do what you want to do. Well, kind of like I'm doing today, where I'm coming to you from the idyllic Pacific coast of Costa Rica today. We're going to talk about turnkey real estate investing in the Jacksonville, Florida metro area today, and its potential as a durable income stream that will follow you over time, sending you those monthly income property cash flow checks to wherever you are. On next week's episode, we're going to talk about money mindset, how you think about money, how that's reflected in your daily actions and behaviors, and whether that daily behavioral pattern of yours will bring you more wealth or not. And we'll talk about the right types of thoughts and behaviors that will bring you more wealth. That's next week. Now, here on GRE, we've done market profiles of Memphis in episode 109. We've profiled Atlanta. You can learn more about that at getricheducation.com/Atlanta. We discussed Little Rock, Arkansas in episode 89. We discussed Dallas a couple months ago. You can learn more about that at getricheducation.com/Texas. 3 weeks ago, it was Birmingham. On episode 60, we talked about Panama coffee farming. You can learn more about that at getricheducation.com/coffee. Today, it's Jacksonville. And if you want to learn about more of those markets, basically just go to getricheducation.com and click on the resources tab, and they're all there. Now, everything I mentioned right there, that is a geographic real estate market, a metro. But even if you've identified a market that resonates with what you want as an investor, which is typically cash flow, okay, you need to align yourself with a local company that has a sound strategy. Okay, so for example, you don't just want to hear that Memphis or Jacksonville are great rental markets and then get out a map of that metro and then pin that map to a wall and then throw darts at that map and pick your property in that investor advantage metro in that way. That's not strategic. It's about your team. It's a company that lives in that market and knows the nuance of the submarket and the neighborhoods. And, really, you can make the case that the team of professionals that you choose to align yourself with in a market, that team is every bit as important as the economic and demographic vibrancy of that market itself. And for today's guest, I think investors get most fired up about who he is and who he represents as a real estate management company. Now, this is a little touchy-feely here, and I'm sure we'll get quite concrete in the interview, but sometimes you just get this feeling around people, this feeling about people, a gut feeling that they're the type of person that is just going to make things right if they go wrong for you. That's who I like to surround myself with, and that's who I like to have on the show. And I think of a few people. I think of a person like syndicator Dave Zook, and I think of today's guest in that same sort of way. Let's meet him and take a virtual trip together to Jacksonville, Florida. Our guest today is co-founder and CEO of JWB Real Estate Capital in Jacksonville, Florida. And he and his company have some remarkable accolades. Inc. magazine, they rank their top fastest growing companies every year, the top 500 to 5,000. 5 years in a row, his company's been named by Inc. magazine as one of the fastest growing. In fact, the last 3 years, they've had revenue growth of 230%. In 2016, they were ranked number 9 in top revenue growth in Northeast Florida, and that's for every and any company in Northeast Florida. In 2016, Florida Trends magazine named them one of the best companies to work for in all of Florida. They were voted the best places to work in Northeast Florida by Jacksonville Business Journal. They're a 4-time recipient of that award, and they've been featured in the Wall Street Journal, the New York Times, Bloomberg, Realty Track, the Florida Times Union, and Jacksonville Business Journal multiple times. And from 2006 to today, clients have invested over $86 million in passive cash flowing properties with them. Welcome to Get Rich Education, Gregg Cohen.
Thank you, Keith. Happy to be here.
It's good to have you here. You know, Gregg, I often say on the show that coastal markets typically don't produce cash flow, while those markets kind of in the American heartland in the South are ones that produce cash flow. But I nearly always preface that with the word typically or usually, because Jacksonville is an exception to that. So why can you get cash flow in Jacksonville, even though it's coastal?
Absolutely. That's a great question. It's something I hear often with new potential clients giving us a call. Because it is unique. When most people think of cash flow, they don't think of places on the coast. Because one of the best things that you can do in order to find a cash flowing property is to have low prices. And normally people do not associate coastal towns and coastal places where you can find cash flow as having low prices. But we do have that in Jacksonville. You know, the other thing about Jacksonville is the economy here is very different from what most other coastal places would be. And it really lends itself well to a strong economy, a strong renter demand as well. Many people think of coastal communities, you think of tourism. Jacksonville, one of the main industries here is not tourism. Our number one employer here is the military. We have a number of Fortune 500 companies here. So that type of renter demand that comes from those types of jobs, combined with the fact that, frankly, Jacksonville has been under the radar for many, many years, which allows for lower prices, gives us this great opportunity where we can get strong cap rates, we can get strong cash flows, but we are also located in Florida, which has shown historically to have a high growth rate as well. So it's truly a best of both worlds environment where we are so focused on cash flow as number one, but it's nice to get strong cash flows and be in a place that historically has grown faster than the national average.
Yeah, Florida as a state sure does grow faster than the national average, and it has for decades. Tell us a little bit more about population growth there in Northeast Florida, where Jacksonville is, and just some more about the business sectors there.
That's some of the most exciting revelations of the story of Jacksonville is the population growth here. They actually track population growth. The last time they did it was 2013 and released the data. From the year 2000 to the year 2013, we went from 1.1 million people to 1.4 million people in Jacksonville. So we are a large enough MSA. We have over 1 million people. That's a great thing. But the rate at which we're growing is tremendous. That's a 24% increase. And if you look at the other places in the state of Florida, that 24% increase during that time is the fastest out of any of the major cities in Florida. Florida is a high growth state as well, so people are truly moving here. Part of the reason for that is the job front.
And you have 3 Fortune 500 companies, not just located there, but actually headquartered right there in Jacksonville. And you also have some on the Forbes Global 500. Tell us about those.
Absolutely. Those are the bedrocks of job creation here in Jacksonville. And 13 out of the Forbes Global 500 have operations here. Those are the largest financial and insurance companies in the world. They have operations here in Jacksonville. We have a lot of exciting job news this year, too. Amazon just came to Jacksonville, which is huge. People and other companies know Amazon. And when Amazon makes an investment in a place, other people take notice and other jobs continue to come. But this was the single largest announcement of jobs in Jacksonville's history. Amazon came. They announced a distribution facility that was back in July, and they said they were bringing 1,500 jobs, which was a huge win for the city. And the really cool news, this actually just was confirmed about last week, Amazon doubled down on their investment. They're now building a second distribution facility here in Jacksonville, which is bringing another 1,000 jobs, 2,500 jobs, a fantastic accomplishment for Jacksonville. And then also we just got an IKEA as well. I'm a big IKEA fan. A lot of people in our office are too. And so we'll have IKEA. They're bringing 250 jobs and opening later this year. So a lot of really positive news on the job front here.
You got to supply furniture to all those new residents there for the growth in Jacksonville. Yeah, when a lot of people think of Jacksonville, it probably got more popularized nationally in 1995 when the Jacksonville Jaguars expanded their franchise there. But, that alone sure didn't cause for a run-up in property prices. And see, typically coastal markets have higher property prices because it's so much more desirable for people to want to live along the coasts. People want to go to the beach, and rents don't always keep up proportionally to that. But Jacksonville is different. In fact, Jacksonville is so different that you have a great proportion of the population that rents. Tell us about that.
We have the second largest percentage of renters in the state of Florida, behind Tallahassee, which has a lot of government jobs. But the main driver of our economy here and the number one employer is the military. And those people that are in the military tend to be a little bit more transient and tend to rent. So we have 35% of our population which rents, which is a great number and really is kind of the bedrock of that demand, which again props up rents, props up cash flows, which allows us to kind of have this opportunity to hit the cap rates that we want.
And that brings Jacksonville's median age down lower than the median age for Florida, and younger still tends to correlate rather closely with a renter demographic.
Exactly. Our median age here is 35 across the state of Florida. It's a median age of 42. A lot of people think of an older population living in Florida, but in Jacksonville, it's a younger population and one that really does want to rent, which is great for our specific model.
Now, actually, there are market effects there in Jacksonville due to the expansion of the Panama Canal.
Yeah, and when I'm speaking about the Jacksonville market, I like to talk about the things that we have here and now, right? We talked about the Fortune 500 companies that we have. We have the other companies that are moving here and bringing jobs. That's what we are today. And our economy is fantastic as it is today. We have low unemployment, all those good things. But I also like to keep an eye out for what's coming down the pike. And the Panama Canal expansion is a big deal for all of the ports along the eastern seaboard. What has happened is the Panama Canal has been expanded. And what that allows is for these ships to come through that are now larger. These ships that come through the Panama Canal now can carry 3 times the amount of cargo as what was there previously, which means a lot more demand for the eastern seaboard. So if you Google this and you read a little bit more about it, you find that there is a mad rush along the eastern seaboard to make sure that the ports are ready for this increase in demand. The effect of this amount of demand from the shipping industry for the ports that are there to support it is measured in the billions, in the tens of billions over the long haul in the studies that they're conducting. So it makes a lot of sense for these eastern seaboard cities to gear up, and Jacksonville is no different. We are. Right now, we have the second largest port in the state, but if you think about the effects of what that increased demand can do to a port that is already the second largest port in the state, it can really kind of take us to another level in terms of job creation, in terms of median incomes. All of these things are great. And the type of jobs that the shipping industry build many times are perfect for renters. So we're really excited about it. Again, I like to differentiate between the here and now, and by no means is all that demand here today. But I think it's pretty exciting for the future and something that over the next decade will have a tremendous impact on rents and pricing in Jacksonville.
When we're cash flowing real estate investors, we don't just want to look at an income stream as a amount in cash flow. We want to know that when our tenant leaves, there's going to be another tenant right there behind them. That's what we call the durability of an income stream. Now, in a metro, you might look at job growth, but a job is not a job is not a job. What's really behind that job growth number? In the distribution sector here, where we're talking about the Port of Jacksonville, which is a logical place to grow because of the ports and the metro's confluence of air, rail, ground, and sea, that durability of an income stream is stronger in the distribution sector because you can't offshore those distribution jobs. Okay, those distribution jobs need to stay geographically fixed to the geography that they're in, and that helps with the long-term durability of your income stream. So it's not just job growth, it's durability in a job sector that really helps contribute. Well, Greg, Part of the durability of an income stream for a renter is through sound management. Tell us about the management of your turnkey properties there.
I'm so glad, and I've listened to a number of your episodes, Keith, and it is such an important concept that is revisited many, many times over. When you are thinking about building a portfolio in a passive nature where somebody else is responsible for delivering those cash flows for you, the market is important, the property is important, but the most important thing, in my opinion, is the team and the management behind it. The team and the strength of that management is the only thing that turns those spreadsheets with those nice numbers that we make decisions based off of into actual cash direct deposited into your bank account on a monthly basis from the rents.
Yeah, management is kind of the glue between the market and the property.
Absolutely. And there are a lot of ways to buy rental properties, but if you want to be truly passive, you have to work with a team that you feel has your back. This is an experience where you're going to be thousands of miles away many times from your investment property. So they should think like you do. Your goals should be aligned. And I find that is one part of the decision-making process that many, especially newer investors, don't spend enough time interviewing and determining, is this really going to be a long-term fit for many years or decades of management?
Well, you do things sort of differently there at your company than most property management companies. Tell us about that.
I'm really convinced that normal property management just doesn't work because goals aren't aligned, like I mentioned. We know from our experience that we need to keep residents in your home for at least 2 years in order to give ourselves a great chance of hitting your return requirements. And really, anyone who manages or owns rental properties knows this, because if you go any shorter, you'll get eaten up with maintenance and vacancy. It'll kill your returns. So those long-term stays are paramount. But the question that I always ask new potential clients coming on board here, why do all standalone, quote-unquote, normal property management companies sign one-year leases? And why are they pretty lousy at re-signing residents? Those questions are really important to ask because we know long-term stays are so important for you. And the reality is that it's harder to do those things. And normal standalone property management companies just don't have the financial incentive to do that.
Now, this is key. A lot of property management companies, their typical model, are not incentivized to keep a renter longer than their initial 12-month lease.
Absolutely. In fact, they're incentivized to do the opposite,
right,
which is really scary. Here's an example. A normal property management company will have a tenant placement fee. This is pretty standard across the industry. Tenant placement fee, as many of your listeners know, is the fee that the property management company earns day one when they place the tenant.
Also known as a leasing fee.
There you go. Let's say that's equal to the first month's rent. Pretty common. If that property rents for $1,000 a month, then the property management company earns $1,000 on day one. Then let's say that they make 10% as the monthly management fee on the rents collected for the rest of the year. 10% of that means that they'd earn $100 a month. And at the end of the year, they earn $1,200. But they had to work an entire year to make that $1,200.
As opposed to getting $1,000 on the first day for the new lease.
Exactly. I mean, there is a lot that goes into it. I know firsthand. We have run our property management company for many, many years now, and I tell you that from rent collection, from building up the relationship with the resident, from the accounting to make sure that rents are delivered, from handling maintenance issues. I mean, there is a lot that goes in. And if you can make $1,000 day one or $1,200 at the end of the year, the best dollar per hour activity for a property management company is actually earning tenant placement fee or lease fees.
Right.
That is not what you want, Keith. And that is where a lot of property management companies do not have their goals aligned with what we want as a cash flow investor. We want our tenants to stay for life. We want to pay one tenant placement fee, and we want them to stay for life. And this is why most property management companies won't sign longer than one-year leases. They would actually be forfeiting a tremendous amount of their annual revenue if they did that. And they're certainly not going to put systems in place to become great at that, knowing that they would give up a significant chunk of their income.
Talking about the durability of an income stream, this is one component, actually keeping that tenant there for the long term and reducing that maintenance and vacancy.
Absolutely. I cringe at this, and I went through this experience myself before we built our own property management company. I outsourced my own property management. This was over 10 years ago now. And I remember the pit in my stomach when I realized that I wasn't getting the type of leases that I wanted, the type of long-term leases that I wanted, and the type of long-term tenant stays that I wanted. And I remember thinking to myself, well, let me look at the numbers. And there was this wave of despair that came over me when I realized that I felt that this was the single most important reason as to why I was lacking in the cash flow that I wanted 10 years ago. And I was like, oh man, I wish I had heard of this and thought of this sooner. So hopefully this helps a few others out there as well.
Yeah, that's right. In fact, you've characterized normal standalone property management companies sort of like a stockbroker that get paid on the number of trades or number of transactions that they make, not on the overall return of your portfolio. And that's what some of them do if they only have 12-month leases at a time, and that increases your turnover and that increases your vacancy rate. As we know, those are the most expensive things as buy and hold cash flow investors, and that's what you do a good job of avoiding. So your standard lease is a 2-year lease, and sometimes you even strive for 3-year leases there.
Absolutely. This is something that we introduced a number of years ago and has been incredibly successful at keeping tenants long term. We don't even talk about a 1-year lease when residents come and think about renting our homes. It is, which would you prefer, the 2 or the 3-year lease? And that, of course, equates into much longer tenant stays down the road. So last year, I'll give you a few statistics. We signed over 700 new leases, and our average duration of lease was 28 months. So between a 2 and a 3-year lease. And that's just a tremendous way to walk into a rental property with at least a 2-year lease in place in terms of long-term stability of the asset class. The other thing that we really focus on that a lot of other property management companies don't is re-signs, right? Re-signs are one of the best things that we can do for clients to avoid maintenance and vacancy costs. Those, like we mentioned, are the big killers to cash flow. So re-signing residents is an opportunity for my team to save our clients hundreds or even thousands of dollars in maintenance and vacancy, and we look at it that way. So historically, we re-sign between 60 to 65% of our leases, and I always look for a good metric to compare that to the industry standard, but what I am convinced of is that most property management companies don't even track it, so it's hard to find an industry standard.
Right. They sure wouldn't want to. So you're getting 60 to 65% lease renewal, and that's after a 2-year lease, not a 1-year lease.
Yeah, absolutely. 2-year lease, 3-year lease, and many times we can have multiple year lease renewals as well.
Yeah, well, you're certainly a business largely driven on client referrals, and you sure can see why when you have occupancy like that. You've now purchased over 2,500 investment properties. You've renovated over 1,500 properties, and you've built over 400 new construction homes. So it really makes a lot of sense as to why a lot of business publications have mentioned you as a top place to work and as one of the fastest growing businesses there. You're listening to Get Rich Education. Our guest is Gregg Cohen. More when we come back. I'm your host, Keith Weinhold.
Are you on track to achieve your financial goals? Income-producing real estate is the most historically proven way to accumulate wealth and has created more financial freedom than any other means. Norada Real Estate provides everything you need to invest in the best turnkey cash flow rental properties. Our simple, proven system will help you create real wealth and passive monthly income. Get your free strategy session with our knowledgeable investment counselors at noradarealestate.com. That's NORADA realestate.com.
As a lot of investors know, multifamily real estate has been one of the best asset classes to be invested in most of the last decade. While the great deals have been harder to find lately, there are still opportunities in select markets where savvy investors can get lots of appreciation and strong cash flow if you have a great team. Dave Zook, founder and president of The Real Asset Investor, and his team have been very active in the multifamily space in Memphis, Tennessee. On the heels of the Great Recession of 2009, Dave and his team quietly started acquiring multifamily assets, and in the last few years, he has syndicated over 2,000 apartment units, creating strong cash flow streams and big appreciation for lots of their investors. It's not too late to get involved. If you're an accredited investor and you would like to learn more about investing in great multifamily apartments with a world-class team, email Dave and his team at info@therealassetinvestor.com.
Hi, this is Rich Dad Advisor Garrett Sutton. You're listening to the always valuable Get Rich Education with Keith Weinhold. Don't quit your daydream.
Welcome back to Get Rich Education with our guest, Gregg Cohen. We're talking about turnkey real estate investing in Jacksonville, Florida for cash flow. So, Gregg, your company manages over 1,300 properties currently. Is your management company and your renovation company in-house? Tell us about that.
Absolutely it is, and I'm a firm believer that is incredibly important if you really want a passive investment. The rule that I think all investors should adopt is that the person who is selling you the property needs to be the person who is responsible for collecting the rent on that property. I think that's crucial because when you have that type of arrangement and the same company who is making the promises to you on the front end of what those returns should be is the same company that's responsible for collecting the rent and delivering, you remove the opportunity for finger pointing and blaming when you can tie those two people together and have one line of accountability. So that's a basic core tenet of who we are and what we believe. We have in-house construction, property management, as well as our investment arm, and I think it's just a real key to our success.
So as an investor, say I go ahead and I purchase a property there, and I'm purchasing the property in a turnkey fashion. Turnkey meaning that I'm purchasing that property as an investor, already renovated, already tenanted, and already under management. Tell us about that ongoing management relationship between the investor and the manager.
Absolutely. Again, this is that passive income stream, and you want to feel like somebody has your back. You want to feel like that person who is responsible for your portfolio is seeing potential problems before you would see them and coming up with solutions. And communication is the absolute key. I always tell clients when they're coming on board that the reality is when you're investing in rental properties, there are going to be frustrating things that happen. Tenants are going to do something stupid to your property at some point along the way. There is going to be something that comes up that is a frustrating event, and that happens in my own properties that I own. And that happens in the properties that we manage for our clients. The difference is that our team is very good at mitigating them as much as possible. But more importantly, when those things happen, they're solved. They're taken care of. And if we do need to let the owner know, the client know about the situation, then we'll come to them and say, here's the solution. Let's go ahead and move forward on this. Or here are the two solutions. Which would you prefer? And that's the type of relationship and communication structure that our clients want. And we want to be very proactive in communication. Again, this is about creating that peace of mind experience for a client who is living in California or New York, or maybe even in Anchorage, Keith. The reality is that you're going to be thousands of miles away. So we're very proactive. We always reach out to our clients on a monthly basis, even if we don't have any news to share with them. I think this is important because we want you to know that you're top of mind. And how many of us have had something that maybe we wanted to ask a company that we were a client of, but we're all busy during the day and we didn't want to take the 15 minutes to give them a call. But if that company is calling me and I can pick up the phone and portfolio manager who knows my portfolio in and out is on the other line, then maybe that's an opportunity for you to ask that question. That was something that you might not have taken that extra effort. So that proactive approach is incredibly important to our clients and something we take a lot of pride in.
Yeah, something I like to say is dealing with tenants can make you lose faith in humanity.
Exactly.
But you have a team of over 50 full-time employees there so that you can be communicative and that you can handle situations. And as a long-time investor myself, I really appreciate the communication from the manager when it flows with the way that you present it, Greg, because you don't just let someone know what the problem is when there's a problem with a property or a tenant, and it's usually the tenant. You actually provide some suggestions or some solutions. So once in a while when that does come up, it's just a lot easier for the investor and they don't need to try to come up with or create their own solutions. When an investor comes and purchases a property, upon that initial purchase, how often is that property tenanted?
Almost without exception, it's tenanted by the time that they close on the property. I mean, that's the way this thing is built. We are here to deliver returns, and there's no better way to set us up for success and set our clients up for success than not having vacancy right off the bat. So almost without exception, that's the way that it is, and truly about creating that stability from day one.
Yeah, and really that's part of the definition of turnkey. You want to purchase a property that's already tenanted because, number one, not only do you receive cash flow from day one there, number two, you do what I call is you protect your cash flow amount. Okay, if you were off doing this yourself and not using a turnkey company, if you were going ahead and purchasing a property by yourself or fixing it and flipping it yourself and then trying to get a tenant, see, here's what might happen. You think you might get a rent of $1,100, but you might only really get a rent of $1,000 once you get your tenant in there. See, when you purchase a property from a turnkey provider that's already tenanted, you already know they're paying $1,100 because a qualified tenant is already paying that. And you might think, oh, well, that's no big deal. If I only get $1,000 rather than $1,100, that's only a 9 or 10% difference. No, that is a big deal because that $100 less, that transfers straight to your cash flow. So instead of you getting $250 cash flow, for example, you might only get $150. Okay, so if you take a 40% cash flow haircut like that on a few properties, you're really going to start to feel it. And we're investing typically primarily for cash flow. So protect your cash flow amount. That's what you do when your property is already tenanted when you purchase.
Couldn't have said it better myself, Keith.
So as far as the character of your tenant, when people think about Florida, they think about retirees. Do you get more of that retiree demographic in Jacksonville?
No, we don't. Well, we do have a lot of retirees in Jacksonville, but specifically for what we're focused on with our model, that's not the traditional renter for us. We focus on 3-bedroom, 4-bedroom, sometimes 5-bedroom homes, and you're probably going to have more people living in the home when you have 3 bedrooms, 4 bedrooms, 5 bedrooms. 2-bedroom, 1-bath homes might be for the retirees.
Greg, so describe to us placing the right tenant in the turnkey property.
Well, you want to have a long-term tenant stay, but you need to have the right resident day one who has the right expectations coming in, that they're going to meet your criteria, but you're going to want them to be there forever. And nothing is more important than having that criteria up front. I'll give you a couple of things that, I would say are pretty industry standard when it comes to placing the right resident, and then some things that we do differently. Number one, want to make sure that from an income perspective, that it is documented and that they can afford the rent. The industry standard is that you want to have at least 3 times the monthly rent in documented income. That is the single most important thing for us. We do run a credit check, although we're realistic when it comes to renting homes. The chances of your person having a 700 credit score and having this income is not very likely because
they're a renter for a reason.
Exactly. And the reality is that this cash flow opportunity exists for you because it costs less to buy this house than it does to rent it. And if they could buy the house, it would be in their best interest to do that. So we do look at credit score, but we're realistic about our expectations there. Obviously, things that you want to make sure you're not putting felons in your home. You want to make sure that they pass the background check. You want to make sure they don't have a history of evictions. But there's a couple of things that we do differently, which I find a lot of other property management companies don't do. Again, I think it's because they don't have the accountability in place to deliver on the returns, which is something that we hold ourselves to that standard. And one of the things that's pretty labor intensive when you're placing a resident is to do what's called a rental verification. A rental verification is where we actually talk to the previous landlord. Many property management companies don't do this because it takes time to communicate and talk with those landlords. And sometimes you have to chase them down. But we think that that's incredibly important. We actually get 2 landlord verifications for every resident that we eventually approve. And just to kind of show you the scope of the amount of work that's required, we will get on average about 500 new leads a week of residents that want to rent our homes. So there's a tremendous amount of due diligence that we need to do. But you learn a ton about a previous resident by talking to the previous landlord. And it's something that's important for us. The other thing that we do differently, and this ties perfectly in line with, again, reducing maintenance and vacancy and achieving those long-term tenant stays, is that we make it very clear in the beginning that we are looking for a resident who wants to be with us for a long time. And we're constantly molding our residents from the very first moment they call our team to say, hey, are you thinking about a multi-year lease? The answer is no, and they're thinking about a 6-month lease or a 1-year lease, which is what many people are expecting. We let them know that we're probably not the right fit. So it's that extra layer of criteria for us, which limits, the number of leads that we could potentially have, but we think ultimately helps our clients win in the end.
Now, when we talk about law and rental property, typically we're not talking nationally. That jurisdiction for your landlord-tenant law is at a smaller level, typically the state level. So talk to Florida as far as, are they more on the landlord-friendly side of the continuum or the tenant-friendly side of the law continuum?
We're more on the landlord-friendly side, which is a great place for us to be considering our model here. You talk to people from the state of New York. We have a lot of clients from there, and they ask that question a lot because in New York, apparently it takes 9 months to evict if you do get in that situation, or even longer. In Jacksonville, It's not that way. It's on average, it's about a 45-day process to evict if we would need to go down that route. It's something that we're certainly not scared of. You don't need to be in fear of being a landlord and having a judge rule that the resident can stay there for a year with no rent being paid. That certainly does not happen, or does not happen often in Jacksonville.
So when you're providing product that are 3, 4, and 5 bedroom single family homes, typically when you have a home with that many bedrooms, you have more residents, and that often translates into people that do want to stay longer than they would for the other side of that, which would be like a tiny efficiency apartment where someone isn't likely to stay for a very long time. So with that in mind, what are those types of property improvements that renters pay more for in that market and desire in that market? And what are those type of improvements that make them want to stay there as a long-term resident?
The great thing that we've been doing this for so long. We've been in business for 11 years now, and we built up a sizable portfolio of our own. So we're fully invested in these neighborhoods. We own over 600 properties as a company and in the same neighborhoods as our clients. So we have truly been there to learn what is a good amount of money to spend and what should we be spending it on in order to deliver a return, right? And either in terms of longer tenant stays or in reduced maintenance costs. Many investors get so excited about the rent to price ratio on the house that they don't look at some of the components which are going to potentially cost them more down the road. The number one thing for us that we do, and this is an extra cost that we incur on behalf of our owners, is that we are going to put a hard surface in the living areas and in the rental home.
Yeah.
I mean, this is just a no-brainer, but I cringe when other investors out there buy properties with carpet in them. Reality is that carpet is not going to hold up after a tenant stay. I don't care if they stay 90 days or 9 years. You can pretty much bet on replacing that carpet every single time, which might be a $1,500 expense. We put a hard surface in the living areas. We do that because those living areas are going to get beat up. We know that. We are aware that families live in our homes and that things are going to happen. And when you put a surface in there that can handle that, then you don't need to replace it every time a resident leaves. We use one of the things we love the most is this plank flooring that we use. We put all of our rentals now, or even the ones that I own that I bought 10 years ago, now they're retrofitted with this plank surface so that if there is an issue, and let's say that one of the planks gets nicked up and it's in the middle of the room, in the middle of the living room, you can just pull that thing up. It costs like $75 to pull that one plank up rather than having to spend $1,500 because you had a stain in the carpet in the living room. Those are the things that just matter so much for our residents. And then they look great too. And it does increase long-term tenant stays because the surface looks wonderful. It's much more appealing and better than what residents have been seeing in other homes that they could have rented or did rent in the past.
Yeah, I like to have the comfort of carpet in my own home, but for my rentals, luxury vinyl plank, or what they call LVP in the industry, it's almost become a no-brainer for a lot of rental properties unless you have a whole bunch of confusing subfloors that are at a different elevation or something like that. So we've been talking a little bit about the improvements inside the walls of the home. For out-of-state investors, how about some things to be aware of outside the walls of the home? You know, a lot of times people are investing in a place like Jacksonville, and they do live in New York or New Jersey or California or Virginia. So what are some of those geographic quirks, I get, that a distant investor should be aware of, whether that's hurricanes in Florida or tax appeals or hailstorms or clayey soils? Really, every place that you invest in has its own geographic quirk. Often it's not apparent to the outsider. What is Jacksonville's?
There is no perfect investment out there.
No.
There always is something that you're going to have to be aware of. I don't care which part of the country you're in. If it's in California, it's earthquakes. If it's in the Midwest, it's, in some of those cities, maybe tornadoes or whatnot. The question that I get often of being in Florida is people are concerned about hurricanes, right? It's good to be concerned about them. Being in Jacksonville, we are sort of naturally protected, being in the northeast part of the state, and we have not had a direct hit from a hurricane in over 60 years. I say that even though Hurricane Matthew, as many of your listeners will know, gave us quite a scare earlier, was not a direct hit. But, the reality is that we have storms. We have violent storms in Florida. Specifically about the hurricane question, many people are not aware of this, but every insurance policy in the state of Florida has what's called hurricane protection or wind protection, or at least every policy that we write or that our insurance team writes for our clients. So that's certainly a no-brainer. The bigger thing, though, is that we are not going to be investing on the coast in Jacksonville, right? We're going to be investing in established neighborhoods that are inland almost exclusively, and certainly not in areas that are prone to flooding. So your chances of a great loss from a hurricane are greatly diminished because, number one, you have insurance, and that's what it's there for, and that's what it protects against any catastrophe if you go across the country. And then number two, the placement of our assets in these well-established neighborhoods inland means that you're, for the vast majority of them, not even in the floodplain. It's certainly something to be aware of, but what you do is you just mitigate those risks and you obviously get insurance, and that's the way our clients look at that.
Talk quickly about the rent-to-value ratio there and the price sweet spot for an investor.
Yeah, in Jacksonville, you'll find that median home sales prices are about $200,000. That's across the entire MSA. We're going to focus in those below middle income to middle income type of neighborhoods. The average purchase price for our clients is $120,000. And for an average property that costs $120,000, you should expect about $1,000 in rent. So you're looking at about a 0.85% rent to price ratio. One of the best things about cash flow in Jacksonville is that we have much lower prices relatively on property taxes and property insurance than what most people are expecting. So it's not all about the rent to price ratio. You certainly can find better rent to price ratios in other parts of the country. But when you look at the bottom line net income, you're going to find that Jacksonville stands out pretty well, mainly because of the reduction in costs of property taxes and property insurance.
Okay, well, what's the minimum investment to get started, and what's your current inventory like?
Well, one of the best things about our, longevity in the business is we're well capitalized. I hear a lot of investors that are looking to get started and they feel like they need to get placed on a waiting list or something of that nature. We've never had a waiting list. At any time, we'll have between 10 to 25 properties that have been professionally renovated that are cash flowing and tenanted and ready for purchase. We can do that because of the longevity of our business and the fact that we have a strong client demand and we don't have to be worried about holding inventory. So we're really excited about that for clients. We always have existing inventory. And the down payment that people should expect, many times you can put 20% down if you are getting financing, but I still tell clients to expect, even if you're putting 20% down, expect that really will be about 25% out of pocket. So if we go back to that $120,000 example, 25% is about a $30,000 minimum out-of-pocket expense is what you would need in order to get started with an investment property here in Jacksonville.
Yeah, so that's typically the closing costs and the down payment together.
Exactly, including the prepayments as well.
Can a listener arrange a market visit with you there?
Absolutely. It's something that we love. Again, I find this is kind of unique for us. We actually fly all of our new clients down. We do this. Quite frankly, I'm surprised that most other turnkey providers don't, because I get really excited about this. Our clients look to us to be a big part of their financial future, and it always just made sense to us that if we're going to be controlling a large part of their financial future, that we should have a face-to-face meeting, right? There's really no substitute for that. So we get really excited about it. We do cover up to $1,000 of the cost for our clients once they're on board. We bring them down. We host them as a part of our campus tour. And that way they get to meet the team. The team is the most important part of this investment, actually, and what can truly make this a passive income stream for our clients. So we get to meet the team, we get to host them for lunch, and we get to go out and look at the assets that they have purchased with us as well. So that's something that can certainly be arranged. We do want to make sure that we get a chance to chat with you ahead of time and make sure that this is a fit across all levels. And certainly that's a part of the normal client onboarding process, but we would certainly love to have all of your listeners down.
That is great that you do that for listeners and investors, and there are not very many companies that do that, Greg. Well, as we're winding down, are there any last things you'd like to bring up that I did not think about asking you?
I always think about what is preventing more people from taking advantage of this asset class. Keith, and your show is just so wonderful, and it points out the positives with the 5 keys. Is that what you call them? The 5 buckets of return from a rental property? Is that right?
You've really got 5 profit centers, right?
5 profit centers. I mean, it truly is, when you look at the numbers, it's a no-brainer in terms of building a financial portfolio that has some aspect of tangible real estate in it. But there has been something that's been holding people back for so long, and it's certainly not the numbers. It's that fear of being a landlord. It's that fear of having to chase rent. And it's that fear of creating another job for yourself, which is not one that you want, which is being a property manager. And as your listeners are thinking about maybe going down this path, pay so much attention to the provider. pay attention to something simple. Do you simply like getting on the phone with them? Do you like talking with them, right? This is something so simple, but it's so important because this is somebody that is going to be there in the good times and the bad times that will happen with a portfolio that's been owned for 10, 20 years. And if you think of them more of like a commodity, you're certainly not giving them enough value, and that can certainly come back to bite people in the long run. You need to be investing with people that you think are the absolute top quality best team that you can find.
Well, Gregg, you put together 3 great reports, and our listeners have the benefit of accessing those. Tell us about those and where we can get them.
Absolutely. Due diligence is incredibly important. We have written some reports. I wrote them myself, and I just think that they provide a lot of value. You can find them at getricheducation.com/Jacksonville. So I would highly encourage you and your listeners to go and check those out. What you're going to find are 3 reports. They focus on the turnkey model as a whole, talking about the opportunity in this specific asset class. There are case studies there of properties here in Jacksonville specifically that you can look at the numbers. You can see how it all stacks up. Yeah, those are there, and I hope your listeners get a ton of value out of those.
Gregg Cohen, it's been our pleasure. Thanks so much for coming on to Get Rich Education.
Thanks, Keith.
Well, that was a lot of good material today with Gregg. How great that he flies investors there. You can connect with Gregg and get the 3 great reports that he put together for you at getricheducation.com/Jacksonville, or if you go to getricheducation.com/JAX, that will take you to the same place. Until next week, I'm Keith Weinhold. Here's to your health and prosperity. You know what else? Don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME. The preceding program was brought to you by your home for wealth building, getricheducation.com.